The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour, where we come to you at the appointed and sacred time each day.
The following takes place between 2 p.m. and 3 p.m.
And I get occasionally a question why I do that. If someone listens to this, a couple hours from today or, a week from today, you got to know that I'm working on what I know at the time. We could be hit by an asteroid here in another hour. I don't think anybody's predicting that. So I like to remind everybody that the market only tells us what it knows at the time. Generally, it knows a lot more, a little bit of wisdom of the crowds. But, do I know what the headline's going to be in the next hour? I can guess at many of them, but not all of them. So, I can be right most of the time. But there'll be a 9/11 or a shuttle blow up or something else that no one else is really banking on. You just have to be prepared for that. 877-927-6648. Email me. That's an eel. Mail me. I like the little snake-like waterfish, the eel. Eel mail at path@tfnn.com. And, of course, you can always put a message in the den. And I think we've gotten our last little pop for the day in. I was looking at here just as we started. So it finally gave everything up. I don't know if there's a headline that someone in the den can pop out, but I was already looking for kind of the downside by the end of the day. I didn't think that there was any reason other than to put in a decent stop, which was about 398. I think we got to 397-ish. But I don't see a lot of reasons not to be short. As I said, looking for kind of a train wreck after the close tonight, and we'll go through those earnings. And it's not anything specific to the stocks. It's just that we've gotten to the point where, at least in the last earnings cycle, we started seeing we were deep enough into the corner that's already started. Also, over time, 19 PE for the S&P 500, pretty much where you want to be a seller. And you want to be a buyer around 11 or 12 for long term. And there was very little to say that we wouldn't be seeing a lot of those earnings retrace, which just makes it even worse. My guess is that we'll be at a 20 or 21 PE. So we still need a lot of pullback on these stocks that are going to have problems with earnings in the next quarter or through the next quarter. Anyway, like I said, we'll go through some of those tonight. Volume was pretty ridiculously light on the push this morning. As I said in the 2 o'clock update, we were about 700 million shares lighter at this time, which is about 10%, maybe a little bit more like 15% short on volume. So I wasn't really wound up and thought. We did have kind of a nice bounce on crude, gave that up. We have, let's say here at the other one, gold kind of about 370. The one thing that probably could have gotten me out of a position and gone flat would have been gold actually running. One of the things that I'll be using gold for now is when it is moving fairly briskly, I will expect that the market does. Gold's fairly good at being one of those things that moves very good when the market doesn't, i.e. when the market's flat. So we'll keep a close eye on that. As we said, the TLT, kind of ridiculous, at least in my opinion right now. I don't think that there's a scenario that I could dream up other than nuclear war that justifies the thought that we're going back to 3% interest rates. Now, maybe something else is going on that I'm unaware of, but my guess is that Chairman Powell, next Wednesday at 2 p.m., delivers a little bit of coal for the market stocking. A lot of people are going to be betting on him being a little weak in the knees, maybe having a little bit of vapors. My guess is that he'll make it fairly plain that we're probably going to 5.5% or 6% over the next year on the interest rates, and far too many people are betting that 4% is kind of the high. Don't think so, especially with China opening back now, and that probably infers a whole lot more inflation. We'll talk a little bit about the stocks that bounced at least this morning on the reopening of China. And that's, of course, the gambling stocks of Macau, and several of them here in the United States. So we got a little bit of that, a little bit of this. Let's do a little history. That'll take us to the break, and then we'll come back, start looking at some of these charts for earnings after the bell. We'll also start thinking about what the end of the day is going to look like. Again, if you have any questions, 877-927-6648. Tell me I'm great. Tell me I'm all wet. Just tell me something.
Then it's all just a little bit of history repeating.
On this day in 1975, Paul Terrell opens the Byte Shop, one of the first retail computer stores in the world. Besides that important distinction, Paul and the Byte Shop are the most famously known for ordering the first 50 computers from Steve Jobs and Steve Wozniak's fledgling Apple Computer Company in 1976. And, of course, pretty much in the annals of history, everybody has their own biases, especially stock traders, or maybe even more stock traders. A lot of times we get a lot of time to think. And of course, they say idle hands are the devil's workshop. But we may get fired up. Most computer traders are kind of A personalities. They think they're right, whether or not it's on a stock or in politics. So it's pretty easy to inflame our emotions. But we've got, I'm trying to think where I was going with this now, but we kind of have to think about that. Anyway, the reason I bring that up is I met Steve Wozniak, and I'm sure he remembers me not, at the original meeting of the Electronic Frontiers Foundation. And that was kind of early, I think in about 1992, 1991. I wouldn't have flown out there. I just happened to be in San Francisco at the time. Everybody then, or at least most of the people that attended that meeting, one was the guy that actually created 3Com and the internet. I bumped into all of them. They said hi to me. But the one thing we knew was that there would be evil eventually for the internet, and we see it now in the headlines every day. But the Electronic Frontiers Foundation pretty much foresaw all of this. We'll be back in a minute.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And as we return after the bell tonight, we've got a few earnings. First one I have up here on the chart is Costco. Hard to think that this does any different than Sam's or Walmart or Target or the rest. And it is whatever they said, my thoughts are that this is a lot about the supply chain and products that they didn't have to sell. I don't think anything's going to be better. If you looked at this in a vacuum, not knowing earnings were tonight, you just say that this is coming back to this gap higher. That gap was on the 17th of October. That comes in at about $460. So could you get a surprise? You could. I don't go to Costco, go to Sam's. Because Sam's is on this side of a six-lane highway, and that means that I'd have to go. It would be 10 minutes every time I go to Costco. So don't have any real problem with Costco other than it's on the wrong side of the tracks, and I could sneak up the old rear end of Sam's Club. And not have to fight any traffic. I can take back roads all the way there, sneak through the Lowe's parking lot, and I'm there. So anyway, from just looking at the amount of folks that I've seen in Sam's, I'm pretty much thinking that it's going to be the same as Costco. I have looked at the parking lot. Doesn't seem to be that hugely packed like, Costco, kind of the same thing. But I'm kind of equating both of them. They both have the same kind of model. They both do about the same thing. But anyway, the last 2 weeks, or maybe even 3 weeks at Costco, or at Sam's, I've got to say that the business has been very light. Now, we start really getting busy around this time of year. Once Thanksgiving comes, it's what I like to call aluminum overcast in Florida. That's because everybody that can get on a plane will get the hell out of Canada while they have a chance. and head on down here. We have entire mobile home parks that are just centered around catering to Canucks. And a lot of times I'll drive by one, which is kind of interesting. And it's just a ghost town all year. And then all of a sudden, tons of folks are there. So we are getting into the busy season down here in the Tampa area. But you know what? Just a ghost town almost all the way through October and pretty much all the way through November. It actually got worse. And I think I went on Saturday. I think I went on Saturday or Friday last week, and generally packed out, just very light. Now, when I go through a lot of stuff, it's all the stuff you don't want. The stuff that they don't have is the stuff I'm looking for. And that's Walmart. But I can't imagine it's very much different than Costco. You think that a lot of that had to do, since them and Amazon both have and get so much stuff from China, the supply chain issues there, them being closed for COVID, aren't any better. So when you look at Amazon, which is kind of in that same logistics business, you are finding that it is down there challenging the previous low of November 9th. That had 91 million shares. You got into it at 75, but you really haven't bounced much. You probably got decent support, but these guys have a lot of problems of their own. Some of it reputational. They got their hands caught in the cookie jar for stealing drivers' tips, and I can't remember which part of the government made them give that $60 million back. But now the Federal Trade Commission is going after them and asking for 10 times that to distribute to the people that they stole from. So is it a light volume pullback? Yeah, is it a little lighter? But man, into Christmas, this thing should just be running, and it's not. And that probably should tell you something. Stock. Yeah, that and toilet paper and paper goods, right? That's what we're out of. But anyway, so that's the first one tonight is Costco. I'm not going to be surprised if they whiff on earnings. Just there's a lot of stuff that they normally have that they're out of. And I think it has nothing more to do than the policies, zero tolerance policies for COVID in China. Now they've been kind of turned around a little bit, but my guess is the earnings are still going to be down. Other than that, we go into Avago, which has had a fairly good run and still kind of high up here. The question is, why is Avago doing good and Apple so poorly? I guess a lot of that is from Apple and getting its hands caught in the cookie jar for slave labor and a great deal of what they're doing. Certainly, Avago, pretty free from that, but they are in the supply chain for almost all the cell phones. Of course, really not that much for Apple, or a big part of Apple. But, does it look that bad? No. I'm not a big, expensive cell phone buyer. I think I bought mine for $250 2 years ago. I just don't use it that much. I'm almost always home trading. I've got 4 big monitors sitting in front of me with a big honking computer that I built myself that has liquid cooling and super high-res monitors. Looking at a little dinky phone isn't my idea of fun. That's why I'm wearing glasses already. But doesn't look that bad. And, of course, this would be more of the downstream Google Androids type of phone business. But, that's it. Did catch a little bit more about what Apple's been talking about. Of course, they're talking about selling a lot of expensive phones and with limited production. They will be back into full production after the first of the year. They thought the first week of January. But again, a tough time to lose out. Now, a lot of these stocks are coming back on lighter volume, but my guess is that they're going to fool around down here at the lows for a while. Earnings are going to come out. Everybody's going to know that they're going to be weaker next year. And these things are going to probably break down in the first quarter of next year, one way or the other. 877-927-6648. Also going on out here, Chewy's and Restoration Hardware. You'll get to those. They are on my list. And also DocuSign.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And as we go through earnings for tonight, looking at Chewy, this has been making lower highs, higher lows, kind of just in the center of this trading range that really goes back to about mid-early summer. For my recollection of earnings, they mostly talked about high material input costs for dog food, that kind of stuff. I still see that they are very good. If we continue to see weakness in grain prices and in beef, that kind of stuff coming back, I noticed that I bought milk for under $3. At one time, I think it was $5.50 or $6 down here. So if that continues, and of course a lot of that is energy prices, with Russia flooding the market with oil, that's probably going to be good for the next 3-6 months. I don't know what happens with that, if they cause a bigger problem with all that money that they get. Of course, they're selling a lot more oil and getting less for it, but it's never kind of worked out great for us to give money to people that want to kill us all. I can think of the $160 billion to Iran. Probably not a good idea. Other things like that. So the question is, in the short term, does it probably look good? It kind of does. But again, I think it's kind of it may get washed out in the bigger part, which is the market just doesn't kind of like spending money on anything at the moment. Okay. 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 Anyway, I don't see a whole lot in this, but it probably should do well next year. One of the few ones out there that should do okay. I don't think it's going to do what it's done in the past, but it'll probably do okay. Talking about getting on those tight pants. It's Lululemon. I don't track the yoga folks that much, but chart looks okay. Not exactly sure what's going on in this sector. Maybe somebody that knows yoga better than I. You got to think that eventually it's kind of be a fad. It's not the worst kind. I mean, it's not a pet rock, but eventually people are going to get tired of working out. I do, just watching them work out. So you got to think that there is certainly the opportunity that if things get tougher with the economy next year, that maybe people quit buying a little bit of this and that. Those tight pants get used a few more times. But who knows? On a chart basis, the only thing that looks interesting out here would be about 338 on Lulu, but don't have a good feel for that at the moment. Restoration Hardware, another one. Eventually, as one of our gentle tigers has said, this is kind of the next coming of Bed Bath & Below. They've used kind of a similar MO in driving this company. So the question is, what happens? Is this the one where it breaks? It's going to happen. At least I think I'm going to know it's going to happen. You just don't know at what point will everybody say that this is the next Bitcoin, or the books are not just gently roasted but completely burnt. But certainly there's enough whiffs around this to make you think that it could have a problem in the long term. I didn't talk about what was the name of that company? Carvana. Just trying to remember the symbol. Carvana. CVNA. Didn't really talk about it yesterday because I figured everybody was talking about it getting blown up. But we talked about it a couple of weeks ago, and it was pretty much interesting that we found that we knew. I mean, it was. I don't know how you didn't know that this stock was headed this way. I probably should have done a little bit more thinking on it, though, because the big thing for me was that they are now. We talked about whether or not Carvana was actually going to take out some other car companies. And the rumor being pushed right now is that it could severely hurt CarMax. And CarMax is the most hated company yesterday by short sellers in the market. So, there always is something else out here. It didn't really do much, But man, are a lot of people in that. I think it's probably well enough financed, but certainly a lot of short sellers in this. I don't know if they've got anything coming up, but you might look for this one to just be a short squeeze candidate if there's no real contagion from them from Carvana. But you got two dojis out here. You're at support. Volume's fairly light today. That's one of the ones I'm looking at for a Christmas run, maybe the last 4 or 5 days into Christmas Eve. Carvana is going bankrupt. The question is, do they take anybody out at the same time? As we said, so many of these folks have gotten involved in Carvana's, what probably is going to look just like FCX, is pretty amazing. But I just thought it was neat to see them that 1 out of every 3 shares in CarMax yesterday was a short sell in it. On the phone line. Okay. Do we have it here? Oh, it's coming up. Should be on there. No, I was busy looking at stuff. We're going to John in Philly. How you doing, John?
Hello, David.
Hi. I get going. I only look during the breaks.
Very good. Say, David, would you like to spend 10 minutes talking about semiconductors?
Go right ahead.
Thank you. You mentioned Avago. You had some comments there. I had 3 quick topics I wanted to ask you about. First was China generally, Taiwan semi, secondarily, and auto and chip suppliers into the automotive business third. Question, David, just on the U.S. and China in the semiconductor marketplace. I recall several years ago, actually it was just after Trump got elected, and there was great focus on China trade. And I was introduced to the fact that on routers and networking equipment, that China-based Huawei was huge and going head-to-head against Cisco. And, of course, prior to that, I had never heard of Huawei. I guess I just wasn't looking. My question...
We're going to the break.
Semiconductors, is China coming up with big semiconductor manufacturers likewise?
We'll be back in a minute.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with a 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Are you there still, John?
I am, David.
Okay. So we're talking about, I guess, really the two-tier part of the market, and that's chips that have huge margins and sell for lots of money, and those that sell for almost nothing, but sell on reels, and the reels have 10,000 parts on them. Is that kind of what you're talking about? The stuff that they put in cars, and this, or low-end electronics, and the stuff that they sell on video cards. That's, you know, the boards sell for $1,000, $2,000, $10,000.
Yeah. What to that issue, David? I was wondering. The question is: semiconductor supply into the auto industry, is that in the next year, 2 or 3, going to be a growing and very large business relative to things that we see in, data centers and smartphones and computers?
Well, certainly the low end of the market is not. Everybody's fighting over getting actual silicon, and the idea, or most people don't know how it's made, but the best analogy is that these silicon ingots are made kind of like a candle, and they're always pulling on the wick and making it a little longer, a little longer, a little longer. So now these things look like, I don't know, maybe a little taller water heater. So maybe they're 6-8 feet tall and 3 feet in diameter, and maybe not that much, 2 feet, weighing tons. Then they take those and they cut them into individual discs and polish them and that kind of stuff. Well, the problem is that during the shutdown, everybody and their dog decided that everything was going to hell in a handbasket. So they quit, or they canceled all the orders for these silicon ingot manufacturing, what would you call them, processes, devices. So there weren't a lot to replace the older ones. And of course, they keep on making newer versions that are bigger and more round, trying to get prices down. But, that whole part, everybody's fighting over those silicon wafers. Just think of them as kind of a record album if you're not familiar with electronics. And that's actually not too far from the truth, that a 12-inch record is about what the size that these chips are now being printed on. But the problem is that they're expensive. They are, depending on what you're looking for, a issue of getting just the silicon, because it is a product that there isn't enough of. So if you're going to make more money, like NVIDIA or AMD or Intel or some of these other companies are making 65, 70% margins, after everything, or you're making 10 cents on a chip that costs 10 cents to make, it's very hard to justify that. You're going to get, a ton of chips off the same silicon. It's just you got to amortize that out. And if you're selling a $1,500 card, it's a lot easier to pay up and get at the head of the line and pay a little more for the wafers that you can't get away with at the low end of the market. And especially for auto electronics, that stuff is at least 5 years old, and it may be 10 years old. They don't do anything that costs a lot of money. Everything they look at is to save another penny here or half a cent there or more. So if you get a new car today, the chip in it's probably, on an average, I bet it was designed 8-10 years ago when it went into manufacturing. They don't do anything that's expensive or now new or hot. Maybe the only example of that is probably something like a self-driving car or something like that actually does need high-end electronics. But then again, they can kind of afford it if you're buying a $140,000 Tesla. Much tougher if you're buying maybe a $25,000 Kia.
David, that's great background. I appreciate that. I think I got the concept. Just the follow-up and last question. As the business of producing silicon is recovering from all those shutdowns and the order disruptions back a couple of years ago, as that improves, is there any particular U.S. listed company that comes to your mind that would benefit greatly as that process continues?
Well, there's only one independent company. It's up in Wisconsin, I think, maybe Michigan. Can't remember. They make some specialized chips that are double top secret for the military. But I don't think they're going to be ever public or do much. They just don't have a big enough scale. You've got Intel in Arizona. But again, I don't think that there's that much there for those guys. They say that they're going to spend a lot of money and build their own facilities, but that's 2 or 3 years down the line. So don't know if there's much here in the United States that makes a lot of sense.
Gotcha. Hey, just as I thank you and depart, your quick comment that I'll take offline, and that is Berkshire Hathaway's purchase of a stake in Taiwan Semiconductor. Does that signal to you that the brouhaha that we're always told about in financial media is a lot of smoke with nothing really behind it, and in fact, Taiwan will be just fine?
No.
Thank you.
No, I think Buffett may be wrong on that.
Thank you very much.
Okay. Especially, I mean, he's made a lot of boo-boos lately. He's not always been right, but I have a feeling that if he wanted to buy Taiwan Semiconductor, and if he was buying it half the price it's now, I think he can make a case that it was well worth it. He's always said he likes to buy companies while they're on the operating table. He's not. He's buying this company at fairly close to highs. So for me, he bought Apple. He never did that well with it. He's buying Taiwan Semi. He always said that he wouldn't invest in anything that he didn't understand, and he didn't understand semis or manufacturing or Apple. He said a lot of things. But one thing you can say for sure is whatever he says, he goes back on a few years later. He was the one that said that options were sewage. They blow up the world. He's now one of the biggest options companies in the world. Said he'd never buy technology companies like Apple. He's in it. Said he'd never buy a semiconductor company. He's in Taiwan Semi. And generally, those ones where he said he wouldn't do well, he's been right first time. There's a saying in poker, think long, think wrong. I'll be back in a minute.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we get back out here. DocuSign. I remember Tom O'Brien talking about his real estate business, said that they really didn't do anything else that anybody can't do. It was kind of interesting. I think they were at the right place at the right time when the pandemic hit. And I made a lot of money on the probably the first few huge moves. I would have made more money if I would have hung with it, but didn't lose a lot of money. You've had a nice light pullback out here. Energy is about the half as it was on the top. I would have liked to seen a little lighter volume just a couple of days ago, but it wasn't bad. So the question is, have they gotten to what somewhere around a true valid value, or on the opposite side? Let me see if I can pop this up real quick. Do they have a monster amount of shorts? Let's take a look at Docu here. Well, certainly the last 2 days they have. They've seen a lot of people shorting them. I probably would not be short this going in there, although they may have problems. But my fear would be that they just don't whiff as bad as everybody thinks. But the last 2 days, 25%, 22%. Week before, not that bad in the 15s, 14 kind of area average. But not too bad. So I would watch this one. I would just be careful about being short it. The chart does look fairly good. You do have a nice pullback on lighter volume. You do have a test of previous volume on lighter volume. And you've got some decent shorts, and that's been kind of the key on earnings to run somebody. So, if I was going to play something, and I'm not after hours, I'd look at Docu. Sell when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Building wealth trading in the stock market seems impossible